All right. Hello everyone, and welcome to my channel, The Best Loser. In this particular video, we're going to be doing the weekly forex forecast for the upcoming week. All right. Today being the 1st of November, 2025. So taking a look at the the charts. I think first of all, let's take a look at the economical calendar. Looking at the economical calendar from Forex Factory, we do have a few high impact news. I mean, it's a lot of high impact news next week. We do have, like the CPIs. We do have interest rates coming up from Australia. I mean, it's a lot of news for me to start going through one by one. Okay, CPI. The interest rates coming from the Australian axis. We also have unemployment rate from New Zealand. All right, we do have the interest rates decision as well coming from the British axis. I mean, it's a lot of high impact news. I'm not going to start going through them one by one, but again, that means there's a chance that we're going to have some volatility next week. All right, so be careful as you trade and make sure that you're paying attention to the economical calendar, okay, depending on whatever your trading strategy specifies. All right. For me personally, I like to, if I'm taking my intraday positions, I don't like to, have the what I said a high impact news around the corner when I'm taking a trade. Okay, that is just my own trading methodology. All right. Okay, so that being said, we're now going to go into the charts to take a look and see what we have from a technical analysis perspective. All right, I'm going to usually kick things off with the Dixie. All right, as you guys know, well, this week we did have a few interest rate releases, and you can see the markets kind of moved as anticipated. Okay, I told you guys that personally, based on the technicals that we are having from the longer time frames, okay, in let's say Dixie, for example, that personally I would like to see a move to the upside. All right, and that is pretty much what has happened here in our charts. All right, you can see that well, after that interest rate release, we've had very nice bullish candles print in the Dixie. All right, so that is pretty nice in my own opinion. That kind of set the tone going into next week, because now what I'm looking for is for price to pull back into demand zones, for further continuations to the upside. Taking a look here in the Dixie as well in the daily chart, you see that we have also taken off this high, okay, this previous area of resistance that we have on our charts. All right, this area here try to work as resistance, but then finally you can see that we are now pushing to the upside. So in my own opinion, while the markets can do anything, we can open next week and this market can just continue shooting to the downside. Anything is possible, but from a technical analysis perspective, it makes more sense for price to give us pullbacks into demand zones, and then from there we'll see further continuations in the direction of the trend. That is what I would prefer to see next week. All right, so that being said, let's take a look. I think there's a level in the 4 hours time frame that I personally like. If we take a look here, you see that this was that pre-FOMC. All right, and then when the release came out, you can see the massive push to the upside, taking off this level of structure. That was the time when, in my own opinion, I saw kind of this uptrend starting, and finally we got this pullback and continuation, taking off previous highs. All right, so the market is current higher highs and higher lows at this particular point. All right, so this is now an indication that well, the bulls are coming into these markets. All right, so I like the price action that I'm seeing. Personally, markets, I would prefer the markets to give me a push to the downside in the Dixie, all right, into this particular demand zone area. All right, 99.20, 99.25 area, anywhere from right around here. Any reversals, I would like to see the markets give us another push to the upside. All right, again, the markets can open and we just continue shooting to the upside. Markets can easily open deep into this particular area and just continue to shoot to the upside. Anything is possible. Okay, so when I say that I would like to see the markets give me a dip into the demand zone, all I'm just saying is my preferred course of action. Okay, not necessarily what the market must do, but this is what I would prefer to see in the markets, because this, in my opinion, this reversal right here is a high quality and a high probability trade off of this particular demand zone that has formed in our charts. Okay, all right, so that's pretty much it for Dixie. Let me see if we go into the hourly time frame. Not much. Okay, not much. My own opinion, we do have this area right here that the markets can easily tap into. Okay, so markets can do this and we continue to the upside, very very possible. But personally, I think I prefer to see maybe something like, the market's giving us a push into this area, maybe just something to create a retracement, and then before we, head lower into this particular demand zone area. This area here, in my own opinion, any reversals will be high quality reversals. All right, so that's pretty much it. If the market starts to break below this particular demand zone, to be honest, I am not so keen on going short either. All right, I would prefer to see reversals for further continuations to the upside. Okay, because again, the markets can easily tap in here, all right, and just start pushing to the upside. So there are a lot of areas that are in support, for the markets to push to the upside. Okay, all right, so that's pretty much it for Dixie. Next up is going to be Euro US dollar, which in my own opinion is almost like an opposite of the Dixie, all right, in terms of correlation. All right, and just in a similar manner, if we take a look as well on the daily charts, okay, if you remember last week, I told you guys that personally, I'm going to prefer to see, euro dollar give me a push to the downside, just to support the move, the technical move that I am seeing, all right, on the charts. And well, lo and behold, you can see that, these markets, after the release of the FOMC, you see that these markets gave us a nice push to the downside, taking off this previous level of support. Okay, another level to kind of keep an eye on right now might be right around this area here, but in my own opinion, I think that is going to give way as well in due time. That being said, even though I'm seeing a bearish push, it doesn't mean the market is just going to keep printing bearish candle after bearish candle. Okay, what I think is probably going to happen is the market might give us a push into this supply zone that we have on the hourly, and then give us another push to the downside, or maybe even give us a deeper push into this daily supply zone, which in my own opinion is really a high quality zone, and then from there the markets might continue to give us a push to the downside as well. All in all, I prefer the short opportunities, unless, let's say, the market begins to break this particular supply zone, then we might have enough room in here to search for long opportunities in the intraday time frames. Okay, but for right now, I prefer the short opportunities. Okay, let's see, if we go in, let's say, into the 4 hours time frame, let me see. Yeah, 4 hours time frame, you can see we had this significant area that was acting as support on our charts. Support. The market got here, tried to act as support, and then finally, boom, to the downside, creating this supply zone area. So the markets can give us a dip into this supply zone area here in the 4 hours time frame, and then from there the markets can continue to the downside. That's one course of action that I would like. Or this might just be a reaction point for markets to give us even deeper push into this particular daily supply zone area, anywhere from right around here as well. Is going to be a very high quality setup for further continuations to the downside. All right, all in all, I would prefer to see bearish opportunities in the euro dollar next week. All right, that's pretty much it for euro dollar. Next up is going to be let me see, it's going to be British pounds US dollar. Okay, so British pounds US dollar, if we take a look at the daily charts, if you remember, guys, I told you that British pounds US dollar is about to start trending to the downside from the really longer time frames. Okay, I'm talking like 3 months time frame. All right, so if we take a look, if you put that into consideration, all right, even though it seems like this market has been trading to the downside, these are early days. All right, these are early days in that 3 hours in that 3 month supply. So while this might look like a clear downtrend, all right, as if the market has already, moved down so much, we are still inside the supply zone from the 3 months time frame. That's just to give you an idea of how much these markets can still move, if barring any unforeseen fundamental analysis. Okay, all right, so just kind of keep that in mind. So that being said, obviously, again, we have levels that have been taken out on these charts. Okay, we have this very nice supply zone right here on the daily charts. Okay, pre-FOMC, and then the FOMC release, and then the market starts to flush to the downside. We have taken off this level of support on our charts. Okay, so personally, again, just very similar to euro US dollar, I would like to see price give me either a bounce from here or a break of this, but then most importantly a bounce from here as well. Either of the two, in my opinion, are valid trading opportunities as we go into next week. Okay, so gonna keep an eye on that. All right, but these are the supply zones of interest for me personally. Okay, so let's see how that goes. Now that's pretty much it for British pound, some US dollar. Not much to say over there. Next up is going to be Australian dollar, US dollar. Okay, if you guys remember what I told you for Australian dollar, US dollar, I told you guys that I'm seeing a flag formation, of which this is going to be the pole of the flag. All right, and then the market has been consolidating again and again. This is the weekly chart, so we consolidate, and guess what? This might be time for the second leg of this particular pole. That is the price action that I'm seeing. This is what I spotted even in the weekly forex forecast from last week, and I explained to you guys that well, if this is the case, if we ignore this price action, that I think we should, and this is the case, then what it means is that a few weeks ago, or about a month ago, we actually had the breakout candle. You can see this massive red candle, and now we've gotten a pullback to retest the breakout area. All right, and from there now, what I see happening is what a continuation for this, move to the downside. All right, so again, another massive short opportunity loading in Australian dollar US dollar. I know earlier this week the Australian dollar US dollar was pushing heavily to the upside. Anybody who was looking at it would think that it's heading to the upside, to the moon. All right, but again, if you pay attention, you see that all that move last week ended up just being a pin bar. It closed a perfect pin bar off of the retracement trend line, off of the pullback, and then from here now, when the candle opens next week, maybe a little push to the upside, but then from there I will expect a nice bearish push to the downside just to complete this breakout pattern, and then from there that might open the floodgates to the downside. All right, so that's it. If we take a look at the daily charts, very textbook formation in my own opinion. The markets just rallied to the upside earlier last week just to pull into this particular supply zone that we have, all right, on the daily charts. Okay, markets just gave us that nice push into this particular daily chart to retest that counter trend line, and then from here now you can see that the bears are coming into this market for further continuations to the downside. It's clear as night and day to me. All right, okay, so again, even though I just said it's clear as night and day to me, that doesn't mean that this market cannot push to the upside. Okay, just please keep that in mind. This market can do this and fall back into this particular flag again. Very, very possible. All right, so this is a possibility, but my preferred course of action is going to be, for price to give me maybe a little pullback and then a continuation to the downside. All right, that's pretty much it. Just for clarity purposes, let me see 1 second. If I remove this, if we go to the 4 hours time frame, we have this area right here, this supply zone, and that led to the break of this level of structure. All right, so I would personally like to see Australian dollar US dollar give me a push in here. Reversal patterns from there would be high quality for further continuations to the downside. All right, so that's it for Australian dollar US dollar. Next up is going to be, oops, give me 1 second, let me see. All right, so next up is going to be New Zealand dollar US dollar. Okay, and again, very textbook setup. This is the one that I pretty much me up this week. I took my short opportunity in New Zealand dollar US dollar because I really liked the technical setup better. Price clearly in a falling channel. All right, again, I am not paying attention to this particular price action. All right, because clearly this is the channel that New Zealand dollar US dollar is moving in, all right now. So that's point number one, and clearly the market has given us a clear bearish move. You can see how the supply zone was respected right here. Okay, the markets pulled back into this particular supply zone, gave us a new push to the downside, taking off this previous level of support, and now forming another supply zone. So this market has been flowing clearly to the downside. So I liked my chances for going short in New Zealand dollar, US dollar, and the market has been behaving accordingly. All right. So let's see if I take this out. If we now come in again, just like in the other dollar crosses, you can see how after the FOMC release, this market has continued to push to the downside, okay, as anticipated. Now, if we go into the 4 hours time frame, what do we have here? This was the retracement channel, all right. And then you can see right here is when markets touch this trend line right here, right around 5,800 institutional price level. That is right around where the market started to push to the downside, and then a little pullback into that particular supply zone that was formed, like I explained to you guys last week. And then from there, the bears came in again for further continuations to the downside, breaking this retracement trend line. And this was when the markets, kind of made up its mind to push to the downside. Courses of action for next week. Remember, this area, I mean, this market is trending heavily to the downside that I almost doubt we might even make it back to this supply zone. A realistic, move for me will be, let's say, for this market to push to the upside, all right, maybe just to retest this breakout level, all right, this area that we have right here, and then from there we can easily continue to the downside. Another push might be just to retest the retracement trend line again, and then give us a continuation to the downside. But again, if the market is able to dip into the supply zone area, any reversals from there as well is valid for further continuations to the downside. Everything for me points to the downside in this particular currency pair. That doesn't mean it must go short, but that is going to be my preferred course of action. All right, so let's see how it goes. Personally, I'm keeping an eye on this breakout level, previous level of support, working as resistance, and then a deeper resistance again to retest it for further continuation to the downside. This is the kind of move that I'm going to prefer to see next week. If you pay attention, what we've been seeing right now is the chances that let's say for the dollar crosses most especially, if the markets open next week, what I would like to see first is a bullish reaction, and then to retest, let's say, supply zones or levels of resistance, and then later in the week we have the flush to the downside. That is kind of the move that I would prefer to see in most of these dollar crosses. All right, so that's it for New Zealand dollar, US dollar. Next up is going to be US dollar, Swiss francs. I don't have much in this pair, to be completely honest with you. This is the demand zone that I'm going to be keeping an eye on for next week. And without wasting much of your time, very similarly, I would like to see prop markets dip down to the downside towards that, let's say, 0.8000, okay, institutional price level. And then from here, any reversals off of this demand zone, I would like to see the bulls come back into this market to continue to push these markets to the upside, right? That is going to be my preferred course of action in dollar franc. All right, now that's it for US dollar, Swiss francs. Next up is going to be US dollar, Canadian dollar. This one literally played out to perfection. If you guys remember from the weekend forex forecast from last week and also the midweek forex forecast, okay, this one played out pretty much to perfection. I told you guys that this pair is in an uptrend both in the monthly charts and in the daily charts, okay, and we took off this level of our resistance in our charts, and well, the market is now dipping into demand zone areas. Finally made it into that demand zone area, okay. This area right here was the area I was keeping an eye on, all right, and you can see how the markets gave us a dip. We ran deep to the downside, okay, pre-FOMC release, but you can see how we ended that day with a very nice pin bar, showing a significant rejection off of this previous level of resistance right here, that is now working as support right here, okay. So pin bar off of that area, and then you can see how the bulls have come into this market, and we are now pushing again to the upside, okay. So this is pretty much our textbook. This one played out nearly to perfection, and in my opinion, the bulls are still in control in these particular markets, and what I would like to see is for them to come back and continue pushing this thing again to the upside as we go into next week. All right, that being said, I would prefer to see a little retracement first in the early days of the week. Let's say maybe Monday. I'd like to see the markets give me a push to the downside, all right, maybe just to get some form of a retracement, maybe you see this previous level of let's say significant level that we have in this area. I would like to see price give me a retest, okay, push to the downside, all right, towards those areas, and then anywhere from right around here, I would like to see the bulls come back again for us to continue pushing these markets to the upside. All right, so that is pretty much my preferred course of action for US dollar Canadian dollar. All right, so let's see how that goes. That's it for US dollar Canadian dollar. Next up is going to be dollar yen. All right, dollar yen, very nice setup in my own opinion. You can see how well we had this area of resistance on our charts. All right, and then finally the markets after FOMC release, we've now gotten a clear break to the upside. All right, so well, the bulls are in these markets, make no mistakes, but personally what I would like to see next week when the market opens, I would like to see a retracement, all right, into this particular, let's say, demand zone that we have on the 4 hours time frame, and then from there I would like to see the bulls come back into this market and continue pushing for further continuations to the upside. All right, that's pretty much what I have here on my charts. Let's say I'm gonna be keeping an eye around, let's say, 15300 institutional price level. All right, so that's it for dollar yen. Next up is going to be British pound, some Japanese yen. All right, not even going to waste your time. This market is pushing to the upside right now. All right, and well, if we take a look at the daily charts, you notice that well, we do have this previous level of resistance on our charts. Let me show you. We have this previous level of resistance on our charts now working as support. We did have this pin bar followed by a very nice push to the upside. All right, and now the markets have pulled back, all right, in British pounds and Japanese yen, and you can see we are finally getting a rejection again, which is now forming another pin bar. All right, hopefully for further continuations to the upside. So early next week maybe a little pullback, but then I would like to see the markets give me a nice push to the upside, at least towards these areas that we have on the daily charts. Okay, that is pretty much what I'm seeing. And then just to zoom into the 4 hours time frame to see what we have on the 4 hours time frame, well, you will see that well, we did have this nice area here that was working as resistance. I'll be very careful calling it a supply zone, but you get the idea. This area here, and from here the bulls have given us a nice push to the upside. Look at the momentum in this candle, okay? And you can see that, well, we've gotten a pullback into that particular area. Little wonder why we are now getting some bullish reaction. So well, maybe the markets can give us another push to the downside, even deeper, maybe towards, let's say, 20150 area, and then from there any reversals, in my opinion, would be nice opportunities for further continuations to the upside. All right, so that's it for British pounds and Japanese yen. Next up is going to be Euro Japanese yen. Yep, Euro Japanese yen. This one I would say it's looking bullish. All right, let's take a look, but not so bullish in terms of a technical perspective. Okay, so you can see we have this area here that has been working as resistance, even though the markets took it off last week. But again, you can see the market kind of dove back into that particular resistance area. So not the clearest from a price action perspective, to be completely honest. But if we take a look at the 4 hours time frame now, you see that we have a clear level of a resistance right here that was clearly taking off with this move to the upside, creating this demand zone in the process. Okay, so well, the market is right around the same area right now, and you can see we've now gotten that deep into that particular demand zone area. The question now is, will 177.50 hold, or are we going to get a deeper retracement into this particular demand zone area? Any one of them is fine. If the market opens, we can get a push to the upside, very, very possible. But again, like I said, it's not the best setup that I have going into next week, or the markets can give us another little dip into this particular demand zone. All right, deep into this demand zone area before we get the reversal. All in all, I would prefer to see long opportunities in Euro yen. All right, so let's see how that goes. That's pretty much it for Euro yen. Next up is going to be Australian dollar Japanese yen. Again, this pair continues to head to the upside, but again, this is the 4 hours time frame. Let me see what we have on the daily. Okay, So looking at the daily charts, again, very nice bullish push. You can see after price came back to fill up this gap that we had right here, we do have this key level of resistance that's been taken off to the upside. So the bulls in this market, we have a demand zone right here on the daily. So the markets can easily give us this type of a push, all right, and then give us a continuation to the upside. It's not the best looking chart right now, in my own opinion, all right, but it is generally bullish, all right, generally pointing to the upside, all right. Let me see. If we take a look in the 4 hours time frame, we'll notice that we do have this particular demand zone area, all right, right here. That took off this level of resistance. Okay, so markets can easily give us a push towards, let's say, 150 into this particular demand zone area. Any reversals from here can also give us a nice trading opportunity for further continuations to the upside. All right, so let's see how it goes. Like I said, technically it's not the best looking charts, but again, I mean, a demand zone is a demand zone, right? Nice. All right, so British pound, Australian dollar, this one kind of flushed to the downside. Last week I was expecting this markets to give me a little push to the upside first before we get this drop, but the markets opened, it was just a sideways hesitation and then the drop. Okay, so right now the bears are in control. Everybody can see that this chart is clearly pointing to the downside, so don't fight the trend. This market right now is heading towards the downside. Maybe if we take a look, let's say, at the monthly charts, we have some serious demand zones in this area. Okay, so well, in my own opinion, you can see that, well, in the monthly charts, we do have this area of resistance right here, and that was taken out to the upside, all right, by this particular demand zone area. So the markets can easily give us another dip into that demand zone area, all right, and then from here, any reversals, we can still get a very nice bullish push in this particular currency pair. Now that's it for British pounds, Australian dollar, and the monthly chart. Now if we go into, let's say, the daily charts, okay, in the daily charts, we do have, obviously, market has taken off this, so the bears are still in control right now, but we have very key significant demands coming off of this particular area. Okay, this area right here. So these are very high areas of demand, and so the markets might give us one more push, all right, into that particular demand area, and then from there, any reversals, we're probably going to see a move to the upside. All right, so for next week, again, like I said, I would like to see the markets give me let's say a little retracement, and then from there, boom, another push to the downside. All right, so that's it for British pound, Australian dollar. Next up is going to be euro pounds. Now euro pounds, again, played out near perfection from that last week. We wanted to see the markets give us this nice push to the upside, which we have now gotten. And taking a look at the daily charts right now in euro pounds, you notice that we have this area of resistance on our charts. All right, the market has broken it, and well, we did have this little breather before we got that nice push to the upside, creating that demand zone in the process. All right, so let me clean up my charts. So if we zoom in, this is the area of interest for me as we go into next week. Probably in markets giving me a push to the downside to retest, let's say, these breakout levels into this particular demand zone area, and then anywhere from right around here, I would prefer to see these markets give me another push to the upside. Okay, this is my preferred course of action. Markets can open again, and from here we can start shooting to the upside. Who knows? I don't have a crystal ball. I just read technical price action, and make my analysis and forecasts from the price action that I'm reading. All right, so that's pretty much it, guys, for euro pounds. All right, let me see, 1 second, let me clean up my charts. Next up is going to be euro Australian dollar. I don't have much on this pair right now, so I'm not even going to waste your time, but I don't have much. This is the daily chart. Seems like the bears are in control right now. Yeah, not much to be said. All right, I'm not going to waste your time. All right, so next up is going to be gold. Now, well, gold give us, let's say, I was keeping an eye on this particular demand zone, all right, last week, but you can see that the bears came back into this market, gave us a push to the downside into this lower demand zone area. That one seems to be holding for right now. You can see that, well, yesterday we did get a very nice bullish candle, off of that particular demand zone area. So I would expect to see the bulls to continue coming back into these markets now for another push to the upside, at least for retest of this previous swing high. That is going to be my preferred course of action. Okay, the bulls came into this market in momentum with last week's with yesterday's daily candle. All right, so let's see how it goes. Let me see if we go into the smaller time frame, the 4 hours time frame. What do we have here? We still have a significant area of resistance. Okay, this was the area of resistance. Yes, the market has come very close. We actually wicked above that area, but we have not gotten any decisive move yet, okay, off of those areas now. So what we can do, maybe early next week, I would like to see this market give me a push to the upside, clearly taking off this area of resistance that we have. And then once that happens, I'll be zooming into the smaller time frames to search for reversal opportunities, okay, for further continuations to the upside. That is going to be my preferred course of action in gold. All right, but for right now, based on that bullish move we got what day was that? Yeah, yesterday, I would prefer to see the bulls come into these markets for further continuations towards the previous swing high area on the daily chart. All right, so that's it for gold. Silver, again, actually this one is doing better. You can see that we've had the past 3 days have been bullish. Okay, after we got that push to the downside, all right, into this particular demand area, or let's say this well, they are demand zones, right? And from there you can see yesterday's candle was actually a full body bullish candle. So the bulls are in these markets, make no mistakes. If we go into the 4 hours time frame, this is actually moving better in my own opinion. You can see that the market is now forming higher highs and higher lows in this particular case, all right, taking off levels of resistance on our charts. So well, we've gotten a pullback. In my own opinion, anywhere from right around here, this market is actually looking ripe for further continuations to the upside. Okay, so that's it for silver. Bullish as well, even looking more bullish than the gold. But one thing about gold, once gold makes up its mind to move, it's over. All right, the competition is over. So I'm not even gonna sweat it right now. Both of them are looking bullish at the moment. All right, the last but not the least is going to be Bitcoin. Again, weekly demand zone area is still holding. The markets give us a push to the downside, all right, into that demand zone area again, and you can see that well, the market is holding again. Like I said, I would like to see this thing continue clearly to the upside. All right, not much of an analysis right now, just I'm interested in seeing this market continue long off of this demand zone bounce. All right, so that's pretty much it, guys. That's all I have in store for today. A very nice week, and I'm wishing you guys a very nice profitable week ahead. Regardless of whether you buy or you sell, please ensure to keep your risk managed. That's how you stay a trader. Cheers, and see you in next week's weekly forex forecast. Bye bye.